In a rapidly evolving financial landscape, the cryptocurrency market is making headlines. From ETF approvals to significant partnerships, the developments are reshaping how we view digital assets. Here are today's top 10 stories you need to know. Solana's upcoming Alpenglow upgrade is set to revolutionize its consensus mechanism. Developed by Anza, a Solana Labs spin-off, this upgrade will replace the current system with two new components, Votor and Rotor. This change aims to enhance transaction efficiency and security within the Solana ecosystem. The upgrade is anticipated to significantly improve Solana's scalability, allowing for faster processing times and lower fees. As the blockchain network continues to grow, these enhancements are crucial for maintaining its competitive edge. The upcoming changes will be closely monitored by developers and investors alike. With Solana's position as a leading smart contract platform, the success of Alpenglow is vital for its future. The cryptocurrency community is eager to see how these enhancements will affect network performance and user experience. Industry analysts predict that successful implementation could attract more developers and projects to the Solana network, further solidifying its market position. BlackRock, the world's largest asset manager, is making headlines with its significant investment in Ethereum. The firm has acquired substantial ETH holdings, signaling a major shift in traditional finance's perception of Ethereum. This move is expected to bolster institutional confidence in Ethereum, positioning it as a core asset. As more institutions follow BlackRock's lead, we could witness a surge in Ethereum's adoption. The implications are profound, as increased demand could drive the price and market capitalization of Ethereum higher. Analysts suggest that this could mark the beginning of a new trend where major financial institutions diversify their portfolios to include smart contract platforms. BlackRock's foray into Ethereum aligns with the broader narrative of institutional adoption of cryptocurrencies. This could pave the way for further developments and innovations within the Ethereum ecosystem, especially as it prepares for its upcoming network upgrade. The cryptocurrency community is closely watching BlackRock's next moves and their potential impact on the market. In a significant move, Tether has announced its withdrawal from the European market following the implementation of the MiCA regulation. This regulation effectively bans USDT from exchanges across Europe, significantly impacting its global dominance. The decision underscores the challenges faced by stablecoin issuers amid tightening regulations. As Tether exits, compliant stablecoins like USDC may benefit from the regulatory shift, potentially increasing their market share. The move raises questions about the future of stablecoins in Europe and how other issuers will adapt. Market analysts are closely monitoring how this will affect liquidity and trading dynamics within the European crypto landscape. This regulatory reset could serve as a precedent for other regions grappling with similar issues. Stakeholders are calling for clearer guidelines to ensure that stablecoins can operate effectively and legally. As the situation unfolds, it will be crucial to see how consumers and businesses adjust to the changing market environment. Trident Digital, a Singapore-based firm, has successfully raised $500 million to create the world's largest XRP treasury. This strategic move aims to enhance liquidity and institutional interest in XRP, especially with a pending spot ETF application. Rather than adopting a simple buy-and-hold strategy, Trident plans to engage actively with the Ripple ecosystem through staking mechanisms. The initiative could significantly elevate XRP's status in the cryptocurrency market. Given Ripple's partial legal victories in recent years, institutional confidence is on the rise, paving the way for XRP's resurgence. Analysts suggest that this development could attract more institutional investors to the XRP market. The creation of a large treasury could stabilize XRP's price, making it a more attractive option for long-term investment. As Trident Digital executes its strategy, the entire XRP community is eager to see the effects on market dynamics and liquidity. With ongoing regulatory discussions, this could also influence the broader sentiment surrounding XRP as a viable digital asset. Recent filings reveal that former President Donald Trump has disclosed over $1.4 billion in cryptocurrency income, surpassing his earnings from real estate. This revelation has sparked renewed scrutiny regarding ethics and regulations in the crypto space. Trump's windfall highlights the significant financial impact of cryptocurrencies on high-profile figures. As discussions about the legitimacy of crypto as an asset class intensify, this disclosure could influence future regulatory frameworks. The political implications are profound, as it raises questions about taxation and compliance for similar high-earning individuals. Analysts are also speculating on the potential effects on the upcoming Clarity Act, which aims to clarify regulations surrounding cryptocurrencies. With the political landscape shifting, stakeholders are keenly observing how this will affect future legislative discussions. As crypto continues to gain traction, Trump's disclosures may push lawmakers to address the evolving landscape more decisively. Investors are left to wonder how this will influence the broader market and future regulations. Coinbase has officially partnered with Shopify, enabling merchants on the platform to accept cryptocurrency payments directly. This collaboration marks a significant step in expanding the utility of cryptocurrencies in everyday commerce. By integrating cryptocurrency payments, Shopify merchants can tap into a growing customer base interested in using digital assets for transactions. The partnership is expected to drive increased trading volume on Coinbase as more transactions are converted from crypto to fiat or stablecoins. This development highlights the shift from speculative investment to real-world utility for cryptocurrencies. Retail adoption is accelerating, with a narrative of crypto for spending gaining traction. As platforms like BingX launch crypto cards for everyday use, consumers are becoming more accustomed to using digital currencies. The implications of this partnership could be far-reaching, potentially paving the way for broader acceptance of cryptocurrencies in the retail sector. As the integration unfolds, industry observers are eager to see how it will impact both Coinbase and Shopify's business models. Ethereum spot ETFs have experienced an impressive influx of $240 million yesterday alone, marking the 18th consecutive day of inflows. This surge has resulted in total inflows of approximately $1.25 billion since mid-May. The sustained interest from institutional investors indicates a significant shift in market dynamics, favoring Ethereum as a preferred smart contract platform. Analysts point out that this trend could narrow the dominance gap between Ethereum and Bitcoin in terms of institutional investment. The upcoming Glamsterdam network upgrade, targeting enhanced transaction throughput, is expected to further solidify Ethereum's position in the market. As Ethereum continues to attract institutional capital, it is becoming increasingly clear that the cryptocurrency landscape is evolving. Investors are keenly watching how this momentum will influence Ethereum's price and market position. The interest in Ethereum ETFs reflects a broader acceptance of cryptocurrencies in traditional finance. As more institutions join this trend, the future of Ethereum looks brighter than ever. The Securities and Exchange Commission is expected to approve a spot Solana ETF within the next 3 to 5 weeks, marking a pivotal moment for institutional adoption of Solana. This anticipated approval follows the SEC's deadline to rule on 91 pending crypto ETF applications, including those for Solana. If approved, it is expected to trigger a Wall Street altcoin season, where significant institutional capital flows into Solana, Dogecoin, and XRP via these ETFs. Market analysts suggest that the approval could stabilize Solana's price volatility, similar to what has been observed with Bitcoin and Ethereum ETFs in the past. As institutional confidence grows, major asset managers are positioning themselves to launch Solana products immediately. This momentum could significantly enhance Solana's market presence and encourage further development within its ecosystem. Investors are eager to see how this approval will reshape the landscape for both Solana and the broader cryptocurrency market. The countdown to approval has the crypto community buzzing with anticipation, as the implications could be far-reaching. Ethereum is currently experiencing a surge in institutional interest, reflected in the record inflows into Ethereum spot ETFs. Just yesterday, the platform saw an impressive addition of $240 million, marking 18 consecutive days of inflows that total $1.25 billion since mid-May. This trend indicates a significant shift in market dynamics, positioning Ethereum as a leading smart contract platform. Historically, Bitcoin has dominated the institutional space, but analysts suggest that sustained interest in Ethereum could narrow this gap, signaling a potential diversification in crypto investments. The upcoming Glamsterdam upgrade aims to enhance Ethereum's scalability, allowing for faster transactions and lower fees, which could attract even more users and developers. Investors are increasingly viewing Ethereum not merely as a speculative asset, but as a cornerstone of the decentralized finance ecosystem. The growing confidence in Ethereum's utility and potential for future growth is evident among both retail and institutional investors. This influx of institutional capital not only strengthens Ethereum's market position, but also sets the stage for innovative DeFi applications. As Ethereum solidifies its role in the cryptocurrency landscape, its trajectory will likely influence regulatory approaches and investment strategies in the broader digital asset market. The anticipation around a potential approval of a Solana spot ETF by the Securities and Exchange Commission is generating significant buzz in the cryptocurrency community. Analysts predict that the SEC will make a decision within the next 3 to 5 weeks. This approval is seen as a crucial milestone for Solana, as it would pave the way for institutional investment in the asset. The implications of this approval are profound, as it could trigger a Wall Street altcoin season, where heavy capital flows into Solana, Dogecoin, and other altcoins. Market analysts believe that a successful ETF approval would help stabilize Solana's price volatility, similar to the effects observed following the approval of Bitcoin and Ethereum ETFs. The growing institutional confidence is palpable, with major asset managers poised to launch Solana products immediately upon approval. This move could enhance Solana's market presence and adoption, attracting more developers and projects to its ecosystem. As the countdown to the SEC's decision continues, the cryptocurrency community is buzzing with anticipation about the future of Solana. Investors are eager to see how this approval will reshape the landscape for both Solana and the broader cryptocurrency market. The next few weeks could determine a new trajectory for Solana's growth and influence within the digital asset space. Thank you for joining us for today's top stories in cryptocurrency. Which news item surprised you the most? Let us know in the comments, and don't forget to like and subscribe for more updates.